all these bill collectors calling me, I use them as inspiration. You know what I mean?
Really?
Oh, when they're hounding, the government's hounding you, bill collectors calling, because I've been broke, so I can understand what it feels like to be broke. When those guys are calling you, instead of shrinking and going into the shell and eating my pizza,
yeah.
I use it as motivation to go out and make more money. So I use my bill collectors as motivation, and that's why I paid myself first, even though sometimes I wasn't.
What would you pay yourself?
I always bought assets. I'd buy a house, or I'd put money in the bank and things like this. But it was just a habit. Exactly what you're talking about. It's up here.
It's about changing the way you think.
You see, they say, my banker says my house is an asset. And my rich dad would say, if you can read a financial statement, you'll see, you can read that your house is actually a liability. I'm not saying don't buy a house. And I like big houses, and I like the finer things of life. Just don't call a liability an asset. And what's trapping the middle class is they're buying liabilities they think are assets.
A very important diagram my rich dad showed me when I was a little boy was a diagram known as a cash flow quadrant. And the quadrant is made up of the 4 different people who make up the world of business. So my rich dad said, in the world of business, there's E's. And E's stand for employees. An employee, he says, you can always tell who they are by their core values. And what the employee, whether the president or the janitor of the company, will always say the same words. The words are, I'm looking for a safe, secure job with benefits. That's what makes them an employee, because their core values are security. The other one of the 4 is the S, or the small business owner or the self-employed. And again, their core values will cause them to use the same words, which are, if you want it done right, do it by yourself. S means they're also solo. They're generally one-person act, or they operate by themselves. On the right side of the quadrant are the B's. And what Rich Dad said the B stood for was big business, or like Bill Gates. Forbes defines big business as 500 employees or more. And their words are different. They say, I'm looking for a good system, a good network, and the smartest people I know to help run my business. So they're unlike the S. They don't want to run the company by themselves. They want smart people to run their companies for them. And then the 4th of the quadrant is the I, and I stands for investor. These are people who have money work hard for them. These people are people who have people work hard for them. And these are the people that work hard for the rich here. This side of the quadrant, these people here work for security. They work for money also. On this side over here, their key value that they want is they want freedom. They don't want to have to work at a job anymore. They don't want to have to work for the rest of their lives. So the beauty of building a business and learning how to invest is very simply that this is passive income. You work hard for a few years, but possibly for the rest of your life, income keeps flowing to you.
When I studied accounting in school, it was possibly the single most boring subject I ever studied. So I had to create a system that was easy enough for me to understand. So these are the basic forms necessary for financial intelligence. One is called an income statement because it has an income and expense, also called a profit and loss statement. There's also a balance sheet, and the balance sheet has assets and liabilities. And these are the very basics for financial literacy or financial intelligence. I soon realized the main cause of financial struggle was due to confusion between the definitions of an asset and a liability. I looked in the dictionary at the definitions of assets or liability, and I got very confused by the dictionary's definition, so I made up my own. My definition of an asset is something that puts money in my pocket, and my definition of a liability is something that takes money out of my pocket. So what caused my mom and dad to struggle financially is my dad, because his banker and his accountant and his real estate agent told him a house is an asset. By this definition, it's actually a liability. He also counted his car as an asset. Yet by this definition, his car was not an asset, it was really a liability. And if these definitions are still too confusing, I simplified it even further. The new definitions are, if I stop working, assets will feed me, and a liability will eat me. And I hope that's simple enough. And my rich dad said, well, if you want to be rich, that's not the way you do it. And instead of working for money, my rich dad taught me how to have money work hard for me. And that's why I've only had a job 4 years of my entire life. Other than that, I'm building companies or I'm investing, and that's all I'm doing. So the most important thing about being financially literate, or the ability to read numbers, is understanding a thing called cash flow. I can tell the difference between a poor person and a middle-class person by simply looking at their income statements and balance sheets and figuring out which direction the cash is flowing. So I will show you the cash flow pattern of a poor person. Generally, a poor person, all they have is a job. The income comes in from the job, goes down, they pay their rent, clothing, a little food, and goes out the expense column. And this is a cash flow pattern of a poor person. The cash flow pattern of a classic middle-class person is a little bit different. Income comes in this way, but with a middle class, they probably have a mortgage, they probably have car payments, they probably have credit card payments. It comes up again through the expense column and then out this way. So what you see here are the cash flow patterns of a poor person versus a middle-class person. So the cash flow pattern of the rich is different. The cash flow pattern of the rich flows from the asset column into the income column. So while the poor and the middle class are focusing on income, what the rich are focusing on is the asset column. And the asset column is the great secret of the rich. So for those of us who weren't born rich and what we have is a job, every time money comes in, this is the point of choice. This is where you make the decision to be rich, poor, middle class. If when this dollar comes in and you take the dollar out this way, then it's your decision. If you go and buy yourself a new t-shirt, cappuccino, a new lunch, then you're choosing to expense it right out. You're choosing to be a poor person. If instead, when you get a pay raise or more money, what you do is you go and buy a bigger house, a new car, or you take a vacation on your credit card, then what you are choosing to do then is to be a middle class person. And if you choose, instead, when the money comes in and you choose to put it in the asset column, then you make that decision to be rich, poor, middle class. By putting in the asset column, at this point, you're choosing to be a rich person. But the choice is up to you, nobody else.